Hello everyone, welcome to Smart Money. In our last video we have talked about support and resistance. Now in this video we are going to learn about how to mark support and resistance on charts. Support means the levels on the chart where a price usually stops falling and might start going up, while resistance is the opposite. It's where the price stops going up and might start going down. Let's take an example of support and resistance on gold. Now, to mark the support area, we look at the points in the chart's history where the market falls and then bounces back up. This is where buyers step in to push the market up. We draw a straight line at these points, that is called a support level. Or we can draw a certain area from where the market keeps going up again and again, and that is called support zone. It's where people usually start buying, and we can make a trade expecting the market to go up. Now for resistance, we check the historical points where the market tried hard to go up but could not, and then eventually went down. This is where sellers step in to push the market down. We draw a straight line at these points, that is called resistance level. Or we can also draw a certain area from where the market faces rejection and cannot go up, and that is called resistance zone. It is where the people often start selling, and we can make a trade expecting the market to go down. Remember that when the support level breaks, it becomes a resistance, and when the resistance level breaks, it becomes a support. If you look back, you can see how the market is respecting these levels. That is a simple way to mark support and resistance on chart in forex and crypto markets. If you like this video, give it a thumbs up and subscribe to our channel.